Good morning. This is Stavros once again giving you our daily Orbex market insights for Wednesday, the 20th of February 2019. In today's episode, I'm going to talk about gold and oil, covering the yellow metals rally ahead of FOMC, as well as giving you my view on black gold's action ahead of the API stock inventories. This is not investment advice, and losses can exceed profits. Let's switch to the charts straight away, starting with gold for our chart. So gold, as you can see, has actually completed, is going to complete likely a three-wave cycle up to the near 1360. And from there, we can expect prices to start maybe going a little bit lower for a double wave downwards. Of course, for this to happen, we need prices to move a little higher. Yesterday, we saw gold prices moving higher for around actually $20–30 higher after a quite strong breakout above 1325. That was mainly on four reasons. Okay, there is new round of trade talks in Washington, of course. We had some news on the Brexit standoff, as some MPs were actually resigned, for the opposition MPs resigned. We keep having some slowing data from China, adding some pressures. And of course, we might be having an effect as traders are pre-positioning ahead of the FOMC meeting later in the night. Now, on the hourly chart, we can see prices have actually reached a 10-month high near 1350. And we might actually see some sort of range ahead of the FOMC, or we might see prices going a little bit higher, but maybe that would be a little bit hard considering, bearing in mind that traders have already positioned for FOMC. Now, depending on the result, of course, we'll see the prices of gold going up or going lower, but nevertheless, I wouldn't be surprised if I saw gold prices go lower to 1327 before we have a continuation higher. Or, of course, we might just see some sort of prices to retracing down below to the 50 Fibonacci retracement of the 1328, 1348 range. Now, I want to go on to the oil charts a little bit. Okay, so oil also had a good rally from the lows of 42.17 per barrel. That was mainly because Saudi Arabia is actually increasing the production cuts. So it has helped the oil bulls push the prices a little bit higher. We are seeing that we have just finished the first wave, and prices broke above, just sitting a tiny little bit above the high of $56 per barrel. If we look a little bit closer on the 1 hour chart, we'll see that the markets are a little bit tight, okay? And that is, of course, ahead of the API reports, okay? And also the fact that we are still expecting some updates on the trade talks between US and China. That, as I mentioned just earlier, they restarted, they reopened on yesterday, on Tuesday in Washington. Now, depending on the results of API, of course, we might see a breakout either upwards or downwards, and that would be outside the Bollinger Bands, okay, either the bottom or the top. But until then, I would still be expecting prices to actually move in a range for the next few hours. And maybe even remain in a very tight range, actually above the moving average of 20. I want to thank you for watching our daily video. There isn't anything else to add for today. If you like us, hit the like button and subscribe so that you don't miss any of our insightful videos and updates. In case you want to know more, you can always visit our blog at orbex.com/blog, where we cover the latest news, publish trading ideas, and provide all the necessary tools to serve you responsibly.